income, you need to pay taxes.
Yes.
If you're a W-2 employee, okay, you're paying, you're earning money, and you must pay taxes in the form of federal withholding. That's what it's called, if you're a W-2 employee. If you're self-employed, your pay as you earn is called estimated tax payments. In other words, as you're earning money, they saying they want their what? Their tax money. They want it when? They want it then. So we're doing that all year long, guys, okay? That's our system. We're doing it all year long, and then from January through April, we do this thing called a tax return, right? Just to see how we did well in the system. Right? Just to see how, but the problem is, once we do that tax return, most of us look at this word called what?
Refund.
Refund. Don't y'all know that, right? Think about it. When you get your tax return, when you talk to a tax professional, if you let them do it, or if you're doing it yourself, the only thing you care about is what's my refund. How much I'm going to get back? I've been waiting on this thing. Right? What's my refund? What's my refund? I'm here to tell you that, guys, we have been conditioned to think that a refund is something good.
Yes. Yes.
We've been conditioned. Because we're like, it's refund. We don't understand what it really is. And it's right there on our tax return. Problem is, we don't look at our tax return, do we? We just want what a refund is and when I'm going to get it back. Right? You said 10 days. I ain't got it yet. Just tell them some of the calls we get, right? Here we go, right? This thing is, guys, refund. Line 75, this is a 2017 tax return, okay? Line 75, if you look at it, guys, at the end of it, it says what? This is the amount you
overpaid.
It's on our tax return. You never see it because you never look at your tax return. That's so you're going to go back and look. Your 2018 is line number 19. Write that down. Line 19 on 2018 tax return. Because the forms changed, right? So here we go. It says this is the amount. So they're telling you what it is.
Wow.
If we're saying we would not overpay anywhere, but every single year we are happy about a refund, we are happy about overpaying on our taxes. We are happy that our jobs, our place of employment took too much money out of our check all year long. And then they're going to give it back to us and we're happy about it. And they took too much money.
Exciting.
Don't we need to change that?
Yes.
We have to change that, guys, okay? We have to change that. And that's what we need to tell people. We have to change this overpayment thing because it's happened. And that said, they didn't say thank you, and they definitely didn't give you no interest on that. That's not smart. If 70% of the people are overpaying, in 2017, the Internal Revenue Service said the average refund was $2,818. That's a little over $200 a month in overpayment. So if individuals could have $200 extra every single month just by stop overpaying, is that a good thing?
Yes.
I have people come to the office and say, I need my money, I need it fast, I need it now. Okay, you're doing tax return, Camelo. They say, I need it now. I say, why? Because I'm late on my bills.
Oh, wow. Yeah.
Which in fact, if you didn't overpay, you might not have been late on your bills. Are y'all with me?
Yes.
This is important.
Yeah.
Y'all know some people that basically say, I can't wait to get my taxes done. Can't wait till next year. I need my taxes. Where's my W-2? Got a kid. I got a kid in the park. That's man. Y'all don't do that. Y'all don't do no borrow no kids, right? Okay, here we go. That's the only time they want to borrow a kid doing taxes. I don't want my kids out of that, right? Yeah, you know the same thing. Here's what I want you to understand, guys. You have total control of what comes out of your paycheck, and you just didn't know it.
All right.
You have total control. Just because you do that stuff, no need to say, hey, they took too much money out. They didn't do enough. No, you got control over it. Somebody said, I didn't know. Yes, you did. You get a check every time. You just don't look at that stuff. Right? To see what happened. It's called a W-4 form. This W-4 form, guys, allows you to tell your place of employment what to do. It allows you to tell your place of employment, this is what I want. This is how I want to be treated. The problem is we do not understand how to do this form properly. We just don't fund. And I understand that because really we hadn't did what? We haven't studied taxes. Okay? Again, I've been doing it for a long time. Been in business for 23 years plus. Right? And doing it. So I understand that. So when I look at it, I say, guys, there's more to just you have an amount of wages, more than just if you're single or married, more than just if you got some dependents, that God's what needs to be on this form. It's more than that. Because some of you guys got interest income. Some of you got dividend income, right? Some of you guys got capital gains income. Some of you guys got business income. You got real estate income. Some of you guys got a Social Security income. Some of you guys got retirement income. Some of y'all got gambling income. I know y'all do. Y'all don't claim that, but you got it. You got it, right? Gambling income, right? You got all the. Then some of you guys got deductions. Some of you guys got student loan deductions, right? Student loan interest deductions. Some of you guys got IRA deductions, health savings account deductions. All of those things and more basically need to be considered when doing this form.
Wow.
But when we are going to our job, especially now, because things are so automated now, right? What happens? We get in the job and they say, hey, what's your W-4 form? All you see is how much you want to claim. Single one, single five, right? That's all they say. Did they tell you all this? This one was about 4 pages long, guys.
That's right. It is.
4 pages long. So if you don't know, you need somebody what? To help you. Are y'all with me?
Yes.
The problem is the people that we ask them to help, our cousins, churchmen,
Yo, God.
people that just borrowed money from them last week. Well, this fucking church moment one. Oh, God, no, calm down, calm down, calm down, calm down. But they're doing the best you can. Somebody said, I need experts.
I need experts.
Experts do this format. And that's what we do with the individuals. Our experts, guys, our certified public accountants, CPAs, and relations, do this form for all of our members to make sure that we never overpay their Internal Revenue Service. Is that good? That's great, guys. That's great. Next thing we do, guys, is position ourselves. I mentioned, right? We have to position ourselves. Somebody said position. We have to position ourselves. Because here's the thing. The Internal Revenue Code, guys, is for everybody. Publication 535 basically says that if you have the intent to generate a profit, if you actively participate, if you keep proper records, you can take expenses that are ordinary and necessary to the business that you have, okay? And you can potentially write off certain things that you're not writing off now. What do you mean, Terrence? I mean, some of the items that you're currently spending money on now can possibly be a deduction, reduce your income, taxable income, so you're paying less on your taxes with stuff you're already doing. I mean, we be wondering, like, how did they make the same amount of money I do or more and they pay less in taxes? But they position themselves. And it's by doing the same, you're already doing it, you're just not what? You got to be structured to be positioned. And here's what we say, got to be positioned, guys. If you had a home-based business with a ticket to generate a profit, those things, you can write out certain things that are ordinary and necessary. These 7 things right here, guys, can save you $3,000 to $6,000 a year on average. $3,000 to $6,000 a year on average. Who wants some of that?
Yes.
Everybody wants some of that, right? Because you want some of that. There's over hundreds of them, guys, but we don't need to know all the hundreds. If you come good at these 7, you can write a lot of money.
Wow.
A lot of money. And this is going to be a different type of presentation today because we're going to go over this. Because I need y'all to understand when y'all leave here, if y'all don't, how many people driving? I hope y'all came on here something with 4 wheels, not 4 legs. 4 wheels, not 4 legs. 4 wheels. How many people here got a cell phone?
Yep.
How many people use the internet or data?
Yeah.
How many people eat out?
Yep.
How many people take trips, vacation, whatever you want to go?
Yep.
How many people got medical insurance and expenses?
Yeah.
And some people, how many people got kids? If you're going to spend money on those anyway, wouldn't you like to get a deduction automatically?
Yes.
Especially them jokers down here, right? Tell the truth, right? Tell the truth, right? Let's talk about it. Can we talk about it just a little bit? Okay? Because, see, we have a thing, guys, so what we do is we basically help individuals even before, because we want to make sure that you know your potential, what you can have, okay? We have something called myinstantpayraise.com, right? Myinstantpayraise.com is something that you can go to that website, all right? Write that down if you want to. After the presentation, go ahead and actually go to there. You can write that down, and then you can basically keep in some expenses to see how much you can save. Okay? That's a good thing. You can see how much that you can save actually right there. And in doing this, guys, you can save a lot of money, and that's monthly expense you go to. I'm going to do it actually kind of manually for you. Is that cool? Is that great?
Yes,
That's
sir.
great.
I'm going to do something manually for you today, okay? Since we're here and stuff, and some of you guys actually drove, okay? Let's talk about it for a second. Your miles. Most of you guys said that you do drive here and there some kind of way, right? All right? The Internal Revenue Service basically said that you can combine, listen to me, this is in the code. You can combine your personal errands along with your business errands, as long as the business errands is your primary reason for the trip or the destination, and you can write that off as a business expense.
Wow.
So, if you're going to go somewhere, wouldn't it be smart to turn it to a business expense first?
Yes.
Let me do it actually this way. How many people in here go to Walmart at any time? Y'all go to Walmart, right? And we buy different items at Walmart, right? What are some of the items y'all buy at Walmart?
Paper
Groceries,
towels, food.
clothes, personal items, everything. Or everything, right? Everything at Walmart, right? Everything at Walmart. Guys, that's good and that's great, right? Guess what though? Oh, thank you, sir. He's basically trying to say he couldn't see it over there. That's basically trying to say he couldn't see it. But here's the thing, guys. If you basically have your miles and stuff you have to spend, right? If you can write that off, wouldn't you write that off?
Yes.
So if you go to Walmart to get those items that you just mentioned, I go to Walmart to get a business supply. While I'm at Walmart, I get my groceries. The IRS said I can combine a personal errand along with what? A business errand. And then I can what? Write it off. If the primary trip is business first, it doesn't matter what I do when I'm there. And the Internal Revenue Service is giving us 58 cents per mile this year. What's the average mile that somebody actually drives? Average mile? 10, no, the average for the year.
30,000.
10,000 miles.
25,000.
And average is about 15,000, right? Average about 15,000 miles. Okay, it's going up. Somebody got a calculator they can help me out even faster here. I'm gonna do this first one. So if I take 15,000 miles, okay? Now we tell individuals that we can help you to basically, you're not gonna be able to write off 100% of those. But through strategies, if we can help you to turn 70% of those miles into business miles, is that a good thing?
Yes.
So we take 70% of that, okay? That's 10,500 business miles. Y'all got that? I want y'all to understand it. That's 10,500 business miles times 58 cents per mile. Somebody give me that number real quick if they can. 6,900. You human. Oh, okay, you got something. 6,900? So what's that? That number is the amount of deduction that comes off of your income.
Wow.
So if you made $50,000 and getting taxed on $50,000 as an example, you basically take 50,000 minus that 6,000, you're getting taxed on what? Are y'all with me? Is that cool? So if I take that as an deduction right here, 6,090, let's just keep that over here for a second. And that's for cell phone. How much is the cell phones a year?
2 months.
2 months. 100 a month on average?
Yeah.
On average, 150. So let's say an average of 100. I want to be conservative. Okay? 100. Okay? 100 times 12 is 1,200. In 2011, the Internal Revenue Service basically said that now there's a way, if you know the rules, okay, that you can position yourself to take 100% of the cell phone expense. 100%. As a deduction. Our experts teach the rules. So that's another what? $1,200. You didn't write off your cell phones before, but now you can. Right? Cost of meals. Y'all eat out? Any of that stuff like that? I'm not even going to actually go to Africa. I'm doing a trip. How many people actually go on some type of vacation? Oh, yeah. I'm saying vacation. I'm talking about going to Lake Norman. I'm talking about real vacation. Right? You're going on vacation. How much is the average vacation?
$3,500.
3,000. You must have just paid something. Right. $3,000. How much is under? 2, 3, what? Let's use 2. Let's use 2. How many vacations do y'all take a year? Not how many y'all want. How many do you take a year? One, possibly 2. See that? Yeah. Y'all need to be like Gerald. Y'all got more vacations, right? 1. And another one. 1. Right. I'm gonna use that 1 then, okay? I'm gonna use that 1. That 1 is $2,000, right? If you can talk, guys, if planned properly, and the CPAs can help you plan properly in doing it, you can potentially write off 100% of the transportation, 100% of the lodging, and 50% of the meals while you're on your vacation.
Wow.
You just gotta know how to do it.
Right.
It's been done all the time, right? You just have to know what? How to do it, right? How to do it. So that's good. Let's do actually last one real quick. Let's do kids. Okay? How many people either have or know somebody that have kids, especially if they're in between the age of 7 and 17?
Yeah.
Y'all know some people, right? So here's the one, guys, that people have not been doing and they need to be doing, Gerald. It's crazy. I've been doing it since my son, and y'all saw my son, right? Since my son was 7 years old. Very not. You hire your kids, okay? Your kid, the IRS said in the code that the kids can work for the parents. Somebody said parents.
Parents.
I say that because every time I do stuff, somebody always says, "What is my grandchild?" I said parents. Okay? Kids can work for the parents. And if they work for the parents, they are exempt from FICA, Social Security, Medicare, and you can pay anybody up to the standard deduction, and they don't have to file taxes. This year's $12,000. Then you have to justify it. Okay, you can't tell a 7-year-old done made $12,000. Says what some crazy people get in trouble for. Okay, but let's do it the right way. But do we spend a lot of money on our kids?
Yes.
We spend a lot of money on kids. Now I'm gonna show a diagram on this actually real quick because I like to show this. If you have money and you're expending expenses, no, you can't see that, no, right? And you're doing some kind of expense, that's an EX. Okay, if you're doing expenses, you're paying for those. What type of expenses do we have for our kids?
Camp.
Clothes, schools, sports, all types of
Lessons.
activities, right? Can y'all say at least $5,000, $7,000 y'all spend on y'all kids for the whole year?
At least.
You do that easily, right? So if my expenses is $7,000 for my kids for the whole year, there, normally I take my money and I pay for those expenses, don't I?
That's right.
But what all we actually saying is, you know, if you hire your child, because you're doing that for them anyway.
Right.
You hire your child, instead of paying this, you say, you know what? I'm going to hire them and I'm going to pay them $7,000. Pay them $7,000. The Internal Revenue Service just basically said that they don't have to file federal tax, state tax, no Social Security, no Medicare. They're taxed what? Free, tax free. They don't have to pay on it. But you get it as a deduction.
Woo. Amen.
You get it as a deduction. And somebody said, well, I ain't got no extra money. But they said, no. You pay your child, tell your child they pay for their own expenses.
Yes.
That's good.
Because the IRS doesn't stipulate what they must do with their money. They can pay for their own school supplies, their own AAU, their own basketball, football, all those things. Private school. People ask me, like, how can somebody write off private school? They ain't got private school yet. Yeah, private school being out there. How do kids pay for it? Are y'all with me? Somebody said it's strategies.
Strategies.
And that is per child.
Wow.
Man.
Somebody said, I'm missing a lot of money.
Somebody want children right now.
It's a lot of money, right?
My child 28.
Somebody add this up for me. Somebody add this up for me. 16,290. Think about that for a second. If you're making $56,000, you're just taking $16,000 off the top off. That means you just saved that in income, guys. Let's do a tax break times 25% for me.
Wow, that's funny smart.
Times 25%, how much is that?
Which one?
16,290 times 25%.
4,072.
4,000.
072.5.
Well, she's serious now. She ain't care before she put change. I want all of my money. 4,072. Guys, this is the amount of taxes you just saved with my quick little thing for the whole year. On the 25% tax bracket.
Right.
That's federal and state and stuff added up. Is that cool?
Yes.
If you divide that by 12 for me.
$339.
Okay, we got a little round.
But y'all dividing it.
Divide this by 12.
Yes. $339.70.
$339. Let's go to $340. Are y'all with me? So the bottom line is, when we're talking about an instant pay rate strategy, when we're talking, oh, yeah, you got it, then you just clicked, right? When we're talking about the strategy, we're talking about our experts, our CPAs, our financial planners, our enrolled agents, working with you on the deductions that you qualify for, right? That you qualify for. And in this example that we just did here openly, this is basically $340 per month
Whoa.
in tax savings that comes back to you instead of going to the IRS.
Yes.
Somebody said, I want some of that, right?
I want some of that.
Guys, that's what that is. The national average is $300 to $600 per month. Now, did I go overboard?
No,
I did 1, 2, 3, 4 deductions out of hundreds of deductions.
Wow.
Is that cool? Is that great?
That's right.
That's cool. Is that great? Y'all would have thought I trained him, didn't you? That is awesome right there, boy. All right, that's awesome right there. Thank you, sir. All right. And here's the thing, guys. This is $300 to $600 per month in savings that we just actually approved